Hey everyone, welcome back to Corporate Decoder, the place where we dive into the corporate world and pull out the juiciest insights. Today we're looking at Honeywell International Incorporated, and let's just say there are some significant shifts on the horizon for this industrial giant. So buckle up because this report might just shake things up. Before we dive in, if you appreciate getting straight, no-nonsense insights from these corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more company news and talk about strategy. So Honeywell International Incorporated is putting out its report on the 22nd of December 2025. This isn't just your everyday update, it is packed with news about how they plan to restructure their business and deal with some big legal issues. They're essentially rearranging their reporting segments, which is a fancy way of saying they're changing how they categorize and present their financial results to the public. This is important because it affects how investors understand the performance of different parts of their business. One of the biggest changes is how they're reorganizing their industrial automation and energy and sustainability solutions segments. Starting in the first quarter of 2026, they're creating a new segment called Process Automation and Technology. This new segment will pull in the core process solutions from their Honeywell Process Solutions business, which is currently under Industrial Automation, and also UOP, which is currently in the Energy and Sustainability Solutions segment. This means the Energy and Sustainability Solutions segment is basically going away as a separate reporting segment. The Advanced Materials business, which used to be part of that segment, was already spun off on the 30th of October 2025 into a new company called Solstice Advanced Materials. So they're really slimming down and refocusing. After this big shakeup, Honeywell will have four main reportable business segments: aerospace technologies, building automation, process automation, and technology. And industrial automation, they'll also have a catch-all category called corporate and all other for things that don't fit neatly into those segments. They're also changing how they report revenue within these segments, breaking it down by products, projects, solutions, and aftermarket. This is meant to give a clearer picture of how each part of the business makes money. As mentioned, the spin-off of their Advanced Materials business on the 30th of October 2025 is a significant event. This business is now a separate, publicly traded company. For financial reporting purposes, it will be treated as discontinued operations starting from the fourth quarter of 2025. This means that while the numbers from this business will still be shown for comparison, they will be presented separately from the ongoing operations. They're also moving some corporate expenses that used to be tied to advanced materials into that corporate and all other category. For the year ended the 31st of December 2024, the advanced materials business brought in about $3.8 billion in net sales, $1 billion in operating income, and $1 billion in operating cash flows. This spin-off signals a strategic move to focus on core areas and unlock value from different parts of the company. To help everyone understand these changes, they're attaching a supplemental schedule with historical segment information. This information has been recast to reflect the new business segment structure and the spin-off of advanced materials. It is important to note that this isn't a full restatement of their past financial statements, but it provides a way to compare historical performance on a basis consistent with how they plan to report going forward. This can be really helpful for investors trying to track trends and understand the true impact of these strategic moves. This supplemental information is meant to be read alongside their annual and quarterly reports. Now, let's switch gears to a major legal development. Honeywell has been involved in a lawsuit with FlexJet LLC, a private jet services company. FlexJet alleged that Honeywell breached their aircraft engine maintenance service agreement and sought damages for delayed engine repairs. Honeywell maintains these service contracts with FlexJet. The company is now reporting that they are in settlement negotiations with FlexJet and other parties involved in these litigation matters. Based on these negotiations, Honeywell expects to record a significant one-time charge in its aerospace technologies segment in the fourth quarter of 2025. This charge will reduce their reported GAAP sales by about $310 million and their operating income by about $370 million. They also anticipate that any comprehensive settlements will involve one-time cash payments totaling around $470 million to the parties involved in the FlexJet litigation. It is crucial to understand that these amounts are estimates and could change if the final settlement terms are different. This is a substantial financial impact, and it highlights the risks associated with complex contractual relationships and potential disputes. Investors will be watching closely to see how these settlements play out and what the final numbers look like. Looking beyond the immediate financial impacts and restructuring, the report also mentions that Honeywell is evaluating strategic alternatives for its productivity solutions and services and warehouse and workflow solutions businesses. This is a really interesting point because it suggests that they might be considering selling off, merging, or otherwise changing the structure of these business units. This further reinforces the theme of significant strategic shifts within the company. Whether this leads to divestitures or new partnerships, it means the company is actively seeking ways to optimize its portfolio and potentially unlock more value. From a stock perspective, you'll see their common stock trading under the ticker symbol HON on the Nasdaq Stock Market LLC. They also have various senior notes listed, like the 3.500% senior notes due 2027, trading under HON 27, and others. This information about their debt instruments is important context for understanding their overall financial structure. Now, let's zoom out and talk about what this all means. Honeywell is clearly in a period of significant transformation. The business segment realignments are about creating more focused and perhaps more agile operating units. The spin-off of advanced materials suggests a strategy to concentrate on higher growth or more core industrial businesses. The FlexJet litigation settlement, while a hit to earnings, brings a major uncertainty to a close. The ongoing evaluation of other business units shows a proactive approach to portfolio management. However, there are always risks. The macroeconomic and geopolitical landscape remains a concern. As mentioned in the report, things like changes in trade policies, supply chain disruptions, or economic downturns can impact any global industrial company. The success of these restructuring efforts will depend on their execution and how well the new segments perform. The market will be looking for clear signs of improved profitability and growth from these new structures. It is not just about shuffling boxes, it is about making those boxes perform better. In conclusion, Honeywell is making bold moves. They're simplifying their reporting, shedding non-core assets, and resolving significant legal entanglements. While these transitions can be bumpy, the underlying logic appears to be a push towards a more streamlined and potentially more valuable company. The key will be the execution of these plans and the ability of the leadership team to navigate the complexities ahead. Alright, that is our breakdown of Honeywell International Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Are these strategic shifts a sign of strength or a sign of trouble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And if you want more deep dives into corporate filings, make sure you subscribe. And don't forget to check out our Discord community in the description for more discussions and insights. Thanks for watching. See you next time.